right, next, growth to value had a very big day yesterday. It was fascinating. We had such a strong value rotation. Breadth was wicked positive. They were really not selling so much of the nicey stocks, right? The value stocks and such, even though CSX and UNP had earnings, trucking, KNX disappointed, didn't matter. Value was absolutely bid yesterday, and growth was taken to the woodshed. Yes, it's a one-day value, growth to value rotation, but I live for this. Like this is what I look for. So this particular indicator, which obviously from the January effect, right down here, showed that growth was really, really, really on the low and needed to have a little bit of a reversion. It did. It spiked higher, pulled back in that February to March, and then bank bailout mid-March. And then it pulled back again a little bit, but obviously we had AI come in and save it. And then we massively moved higher. And then June, you know what happened in June, right? Stalking right here, my whole thesis anyway, stalking value rotation. And we did. We had a really, really, really nice June 1st, and we've continued. So nothing has changed. We still have a value rotation in play. Short covering, they're still trying to get out of their massive shorts. If you look today, you see Rivian and Nikola. And so they're not done. They're almost done, but they're not done. Anyway, the point is we've got this beautiful piercing, in other words, fake breakout, fast failure on yesterday's NASDAQ sell-off of 2.2%, which I think was the biggest in 4 months. Don't quote me on that. Doesn't matter. Anyway, this is what I'm looking for. Still. I still need this indicator right here to really break down. You can see how it's been protected. It's been trying since June, by the way, literally since June 1st. This indicator has been trying to take out tech. In other words, to outperform tech. Money has been rotating into value, oversold, dash for trash, whatever. But the point is, this mega cap concentration risk is absolutely at risk. We have not broken here yet. So the point is, we had a very, very nice reversal. This was, remember, green. And now look at that, stunning, but we need to break this. And I'm definitely looking for this. Hasn't come yet, but when this rolls over, this is a ratio chart of growth to value. It is a fabulous backdrop to go long value, long things. And yes, energy would be part of it, right? Banks, reflation trades. This was the growth rotation of size, that concentration risk in April, massive. Not much more than the January effect. This was the April kind of AI bank bailout timeframe. But we're starting to soften and flatten. And I would say risk of rolling over, but not right now. Yeah, transports are not dead. JB Hunt is gorgeous. I still like this one. You know that. Boring, but profitable. I don't know. To me, IYT is very, very nice, but it's gotten extended. So this 259, 260 area, and remember the intermarket that I showed you early, we are not quite there yet. Let me just show you what I mean by that. Hold on. Check this out. I love this chart because it's what helped me get a recommendation out on the Jets and then IYT after that. Let me explain. This is a relative chart, IYT, Transportation Index to SPY. Why? Who cares? Because I look for strength and weakness in sector rotation. This was a phenomenal post-COVID buy. It was not even 2008 level. It was 2004 level. It was so exceedingly oversold, IYT to SPY, where they basically just dumped, FedEx, UPS, airline, everything got demolished. And it was a phenomenal outlier that reverted right up to here. Now, recently, and I know this is chunky and very bothersome, but I don't care. It works. This started to turn higher. And you know me with the triggers, right? We get above zero, That's very nicely bullish as a sector rotation confirmation, but we can also play this move, and that was June 1st. All that stuff started to come up off the bottom. This is obviously very bullish. Stochastics hasn't even rolled over yet. I'm just taking this picture now, right? So my baseline bet was that we would come back into this area right here, and we're not even there yet. So in my humble opinion, transports, although very boring, and they didn't like the report from CSX and KNX yesterday, doesn't matter, they got bought this morning. MATX spiking like crazy. JB Hunt with an 18% revenue miss, spiking like crazy. This is still in rotation. This is where positioning matters more than the fundamental report, or the value managers say, yep, we're in the trough. They're going to come out of it now. So we're going to look forward 6 months, whatever they're doing. I don't know, but this was what helped cue me in, stocking a sector, stocking a value rotation on June 1st. And then this started to turn higher. That's bullish. That's bullish. This is still bullish, a little bit more. Wouldn't surprise me if we come right back into that ratio, which you can't see it, but it's like 0.6, 0.59. Anyway, I still think transports and safety, as boring as they are, will give you more bang for your buck in the next month than chasing tech. I think tech is absolutely due a pause. Just needs to break down.